Welcome to Pioneers in Payments, where payments experts share their insights. Now, here's our host, Donna Blum.
Hello, everyone, and welcome. Today, I have the pleasure of speaking with Gail Hillebrand. And Gail, I just want to welcome you to the podcast.
Thank you.
Gail, would you mind getting us started by telling us a little bit about yourself and your background in the payments industry?
I'd be happy to. I'm a longtime consumer advocate. Currently, I sit on the Faster Payments Council board for the consumer segment, and I also chair its financial inclusion working group. Prior to that, I had 9 years at the Consumer Financial Protection Bureau, leading a division. And before that, about 25 years at Consumer Reports, doing advocacy on all sorts of consumer financial services issues, including payments.
Wonderful. And we actually met recently at the Faster Payment Council's fall member meetings. So I'm so glad that you were willing to join us here. The purpose of this podcast really is to just glean some insights from payments industry experts, and you certainly qualify as an expert with all of that experience. So Gail, my first question for you is about the most notable trend in the payments industry today. What would you say is the most notable trend?
Let me say first that for consumers, payments are like the plumbing. It's something that should just work right every time without you having to know what's behind the tap when you turn it on. So the trend I want to talk about is fraud. Fraudsters have discovered faster payments. Now, every new payment system is discovered by fraudsters, and they do different things with it. So now we're having the moment with faster payments where the same thing is happening. And when I say fraud, I mean both kinds of fraud. What the bankers call fraud, which is someone has taken over your account or gotten into your account for an unauthorized transaction. And also what consumers experience as another kind of fraud, which is where someone tricks you into sending your money to them, sometimes called authorized push payment fraud or APP fraud. The bankers say it's fraud and scam and they're different, but for consumers, your money is gone either way, and it's all fraud to you. There's a kind of a mismatch between customer expectations and the reality here. People think that P2P, for example, is safe. There's a Pew Charitable Trust study where they asked people why they used P2P, and 47% said it makes paying people safer. Well, that's a little surprising if you think about the response that people have gotten when they've had problems with P2P, where they've been told, oh, too bad, too late, it's gone. So the numbers were actually higher and more troubling across racial and ethnic demographics. It was 10% of people of white consumers said, I've sent money to a scammer at least once on P2P, but 22% of Black and Hispanic consumers. So there's a real issue here to be addressed.
Kind of an education issue, perhaps?
I think there's more to it than education. People have busy lives. They're holding down multiple jobs. They don't have time to have to know about the strange intricacies of all of our different payment systems, and they shouldn't have to.
Right. I agree. Well, let me kind of shift gears and we'll talk about the greatest opportunity that you see in the industry today for organizations that process payments.
I think the opportunities can be to get on top of this fraud question. So we know fraud's rising globally as well as in the US. The Washington Post referred to the US as having a nonstop scam economy. And that was an article about robocalls, but robocalls and phishing are the front end of scams and payments are the back end. So we need to be trying to address this in both places. In other countries, we're seeing the same issue in Brazil and the UK. Fraud is scaling as the payment system scales. So as a new payment system, in this case, instant payments and faster payments comes on stream, the fraud's coming on stream as well. And so you've got newbies and fraudsters scaling together. And that's a point of danger and a point of both opportunity and necessity. And when I think about necessity, it's really the necessity for us to harden that silo. Scammers are global. If we have the weakest payment system, they will come here and go after our customers. And obviously we don't want it to happen in other parts of the world either, but we're here. And when we talk about hardening the silo, I think we're talking about fighting fraud at every part of the system. So for payment apps, payment providers and financial institutions holding sender accounts, that means identifying probable scams with pattern analysis at the time the customer is trying to send money. It means building in some disruptors. You know, there's a pattern to some scams like the romance scam. You get the person to send you small amounts of money for a while and suddenly you ask for a big amount. That's a pattern that can be recognized by AI. That's a pattern you can write software to find. And that customer could get a note that says, other people who have done this have lost their money. Would you like to think about this for 5 minutes and come back if you still want to send it? So there are things that can be done, a lot more than what we're doing so far. For the financial institutions that are banking the recipients, we're going to need a lot more know your customer. We're going to need real pattern analysis there on what kind of money is coming in. In Brazil, when instant payments came in, lightning kidnappings went up 40%. And since the payment system operator there is the government, they responded by putting a cap on how much money you could send at certain times of day. The time of day when kidnappings were occurring, you couldn't send very much money during those times. And we need to be just as smart as that about whatever kind of fraud we're seeing. So velocity controls on recipient accounts and some restraints perhaps when those accounts are new. And finally, we're going to need a very active role by the networks, the private networks and the new FedNow as it comes on stream. Because the network can see things that the individual banks can't see, and certainly individual consumers can't see. And when we think about what the networks can do, there's quite a lot. I heard a phrase recently at another conference, freeze and seize. And it was being used outside of instant payments, but I think it applies as well. And that's basically as soon as the one bank messages the other bank saying, my customer says they were scammed, freeze the money while it's figured out. And we hear big banks and small banks pointing the finger at each other saying, well, they did it for this other guy, but they won't do it for me. This needs to be automatic. If a customer is reported a scam, there should be a freeze. And that'll take some of the profit and some of the speed out of fraud. We're going to need networks to do really deep analysis of what they're seeing. And we're going to need them to get those fraud reports in real time, because if they come in late, a lot of people will get scammed in the meantime. And finally, we're going to need a remedy for consumers. The UK has a voluntary system where consumers who lose their money through authorized push payment scams, frauds essentially, get about half their money back. And the UK government said, that's not good enough. And now they propose extending that system and making it mandatory. And I think we're going to have to ask that same question here in the US. We should prevent as much fraud as we can, but for the part we can't prevent, we should have a system to make the customer whole. The things that create the opportunity for fraud are the very things that interfere with education having an effect. A sense of urgency, a sense of stress, money worries. And that's what fraudsters create or prey upon. So education is not going to be the silver bullet here.
That makes sense. Well, let's now talk a little bit about one of the greatest challenges. And we talked a little bit previously about specifically the challenge of financial inclusion.
So almost maybe not every, but it seems like almost every month you hear somebody say, we have a great new fintech product and it's going to enhance financial inclusion. At the Faster Payments Council, we asked a harder question, which is, what's it going to take to serve the lower asset customer better? What's it going to take to bring more people into the system and serve them the way they want to be served? So you can read that report at fasterpaymentscouncil.org in the Knowledge Center. We looked at who's not yet included in using faster payments, and that's the financially fragile, people with low liquidity, people experiencing income volatility, and people living paycheck to paycheck. And if your listeners are thinking, well, that sounds like everybody I know, that sounds like America, that's exactly right. The paycheck to paycheck population, depending on what report you look at, is between 50% and 3/4 of the non-retired population. So this is a lot of people.
It is.
So in that report, we looked at the characteristics of these consumers, and then we looked at what are the things that might hold them back from wanting to be users of faster payments. And we identified 8 barriers. I'm not going to go into all of them, but I will list them for you. And then we'll go into 2 or 3. The barriers we listed were design, liquidity, constraints for the customer, trust, mistake, fraud, security concerns, what we call cash in, cash out, which is the extra cost if you are an unbanked person of converting the money at both ends into and out of digital and back to cash, because not everybody you pay will take something else, and interoperability. And for every one of those 8 clusters of barriers, we identified action steps that private entities in the payment sector can take to reduce those barriers. We didn't want the report to just be, here's a problem, but to really talk about what can be done about it. So in the barrier related to design, this is a basic issue when you create a product, is you design it for whatever customer you have in mind. And if a product that was designed for sending birthday gifts and splitting restaurant bills happens to work for a person on a tight budget who's paying an important bill, that's an accident. If you really want a product to work for that customer, you design it for that customer. So we recommended a lot of user-centered research as the products are designed and improved, and a lot of research about how it's actually being used in practice, because we all know that sometimes people use products differently than what the designers had in mind. We also recommended a series of things in design that boil down to the product should be simple, reliable, and resistant to errors. Simple is basically stop changing the interface, so people don't have to go relearn your system every time they want to just send a little money somewhere. Reliable for households with low liquidity. People may need a receipt. They may need to do confirmation paid and make sure it's going to the right place. They may need a little more assurance that it got there. And error resistant, there's all kinds of testing that can be done to figure out which part of the population makes what kinds of mistakes or errors, and how can you target those pop-ups and warnings so that they're less likely to do so. If we just all get a standard warning, we ignore them. But if we only get them at the times when our pattern shows we might be about to send it to the wrong person, we're a lot more likely to pay attention. So those were the issues in design. The other issue I wanted to pull out from the financial inclusion report is trust. And in trust, we identified two big drivers. Everyone's seen the FDIC's reports every 2 years on the unbanked and why people don't use banking system. And part of it are these trust factors. So we identified two things: fees and customer service. On fees, we said, make them simple and don't change them all the time. So that because the FDIC's work on the Unbanked showed it wasn't just the amount of fees people were worried about and deterred by, it was the unpredictability of those fees. In trust, we recommended, everyone's talking customer service, more customer service, better customer service. Everyone's talking about how are we going to have 24/7 customer service if the payment rail is 24/7? That's an important question. But there are also questions about the quality of the customer service. So we recommended it be multilingual. We recommended it be omni-channel, multiple channels. Of course, you should be able to get customer service right in the app if that's how you want to operate, but you should also be able to get it by phone. And we recommended that sometimes people need to talk to a live human being when their money's missing, when they're not sure where their money is, when they think there's a problem. So the access to customer service, really important, lots of different ways, but also the quality of the customer service is important. If people actually get through the system and they're told, oh, sorry, go away, we can't help you, two things are going to happen. They're going to lose trust, and the company is going to lose vital information about what's going on with their own product. Because when the customer is told, too bad, it's irreversible, they're going to hang up. And that means that information about what's really happening with those customers and what's going to happen with your next customer is going to be lost. So customer service, we identified as a barrier for financial inclusion, but it's a valuable source of intelligence, business intelligence for providers, if they do it well and they get that information in the door.
Wonderful. Well, it sounds like this report just has so much invaluable information and advice. I'm going to want to share maybe a link to the report in the description on this video. So I'll get that from you and we'll be sure to include that. Gail, I usually ask this one final question of all of my guests, and that is, if you could provide payments professionals with one silver bullet piece of advice, what would that be?
I think the silver bullet has to be about fraud, even though there is no silver bullet for fraud. And I would say, pay attention to prevention and to remedy. Everybody wants to prevent fraud, but we also need a remedy for consumers. And we know how to do this. We have it in credit cards. The liability goes on the entity who banked the sender, not because it's their fault, but because you have to put it in one clear place and then let the people inside the system work it out among themselves. And the networks can create rules that impose these liabilities and then move it around inside the system. And if they don't, I think we're going to have to see regulators do it.
Yeah, that makes sense. It'd be so nice to see the organizations, though, really take a proactive approach to
Right.
both sides of the equation.
Right. And you can't have a rule that says do this, this, and this, because fraud is too fast and fraudsters adapt. But if you have a rule that says you're on the hook, that gives those financial institutions a tremendous incentive to innovate around prevention. And that's what we need is constant innovation around prevention.
Right. Let's let the market work it out and settle on the best solution, right?
And keep changing it to keep up. Yes.
That's right. That's right. So Gail, some of our listeners might have some recommendations perhaps for the Financial Inclusion Working Committee. How would they go about sharing some advice with the group?
Thanks for asking that, because we know there are plenty of good ideas in financial inclusion. And our Financial Inclusion Working Group wants to hear both what people are doing that's working and what they've tried that isn't working, so that we don't, we get all of that knowledge. And people can go to member services at fasterpaymentscouncil.org and send a message and just note that it's for the Financial Inclusion Working Group, and it will come to our group, which is still active.
Wonderful. Okay, very good. Well, Gail, I just want to thank you so much for your time and your just your wealth of information that you've shared with us here today. And I also just want to thank all of our listeners for watching today. Have a wonderful day.
Thank
Bye
you.
now.